Thank you very much, everybody, for joining the next edition of Rupee to Sampatti. Today, we have none other than Mr. Ashish Kyal as our speaker. As you know, he is a CMT and author. He is founder of the Waves Strategy Advisors and the Ashish Kyal Trading Gurukul. He is author of several books. One of them is the international book, Effective Trading in Financial Marketing Using Technical Analysis. He has been Khiladi number one on CNBC Awaaz on more than 30 occasions. Can you believe it? More than 30 occasions. And he is a frequent speaker on the international circuit, Z Business, CNBC, TV18, 18 Now, Bloomberg, and so on and so forth. He is a columnist who regularly contributes to Economic Times and Navamara Times as well. In today's difficult circumstances, we have the right topic for him, portfolio adaptation to difficult times. We've all seen how things have moved up and down, back and forth over the last few weeks. And what was told or discussed in our last webinar, some of it has come true, including the price of gold going down. So now let's see what the expert has to say about how to adapt the portfolio in difficult times. So without wasting much time, Mr. Ashish sir, I hand over to you for your discourse and telling us all the insights about what to do with our portfolio today.
Thank you very much for the kind introduction and giving the opportunity for me to be speaking here. And I'm sure there are all the doctors who are attending this session, and it's always fantastic to be addressing them. It's going to be tough choice for me to talk about markets because since majority of the audience is doctors, I'm going to make it very simple, very easy, and I'm going to try to break down things in an easy, understandable language. Because there are more intelligent people than me who understands life. I understand financial markets, so life is more precious. But I will try to make it simple, and I'll also try to be not so serious about financial markets. You know, people who are talking about markets, they are very serious about it. They tend to make it something very big that they are doing. I'm saying that this is something which is very easy, very simple, and if I can do it, you can do it. My background, I come from an engineering background, and I have authored a book in financial markets. So being an engineer, if I can do that, then even doctors can learn it. And it's very important because in today's world, you need to take charge of your own income that you are generating. So
Right.
till now you're working for money. I think it's important that the money works for you. And that is what the aim is. I'm going to talk about few simple things that everyone can combine, everyone can use, everyone can look at the charts and all of those things. I'm going to do that in a very, very simple fashion. Let me very quickly share my PPT. I'm not having much things on the PPT, just a few things on the PPT which I'm going to share across right now. And let me just share that screen, just a second. And if you can see my PPT, this is a WhatsApp group which I have created for all the participants here. They can just join the WhatsApp community or the WhatsApp group. And once they are joining, they will be getting some kind of updates and those kind of things on the daily basis, which is more to do from a trader's perspective. But it's still okay to learn about trading. Even if you are not trading, it's okay to learn about new subject, new things. That's what I think. And you can join.
Many of us would be very much interested in learning about trading as well.
Okay, awesome. That would be great. So let's just move forward. And I'll really thank you for giving the opportunity to me and giving this platform to, you know, reach out to an audience which I have never addressed before. So that's fantastic. My Telegram group is there. You can join the WhatsApp group, that's fine. And just a very quick disclosure, we are SEBI-registered research analyst. Whatever I'm doing here is purely learning perspective. I'm not trying to tell you to buy anything or sell anything, you know. I'm trying to make myself safe. By not telling you what to buy or sell, I'm just trying to play the safe card. That if you make loss, it is you. If you make profit, it is you. And that's a very classic saying, right? What we say is that if I am losing money, it is because of someone else. If I make money, it is because of my own capability and my own research that we say that we are able to make money. But that's not correct, because if that is the case, then you will never learn. That is very crucial, because if you make money, it is your money. If you lose money, it is your money. And that's a very, very important saying that people should always remember. So let me now go back to what is technical analysis. I'm sure this can be something that majority of the traders might be aware, but not all the doctors might be aware of what is technical analysis and how it can be used to trade and why we should know technical analysis. So there are two schools of thoughts. One is fundamental, where people look at all the fundamental aspects of balance sheet, P&L, cash flows, deriving at a true value, fair value, undervalued, overvalued. But technical analysis, you look at charts, and charts. Charts is nothing but like an ECG of a heartbeat of a person. You should actually measure the heartbeat of a person when the markets are on, especially the traders. If you do that, you will really realize that how much the heartbeat can go up and how fast it can slow down, which can itself be something to study upon. You know, how is it possible that the heartbeat can normalize in such fast way and move between the flux of emotions? Because traders mindset moves between flux of emotions. It moves from a very strong anxious fear of missing out emotion to a very complacent emotion where you think, okay, it's so easy to make money, and that fluctuation is what gives the kick or gives the thrill to every trader. And that's why trading is also like an uh, also like if you make money, the high that you get is as good as you have taken some kind of a drug. That's the high that you can get if you make money. And when you lose money, you can be so depressed that, okay, there is nothing in the life that you have done right. That's how fluctuations happen in the market. And then today was a classic example. If someone tracked what happened with Nifty in just few minutes, few moments, Nifty just moved down by 200 points in less than, I think, 5 minutes of time. And that's craziness happens in financial markets. And by the way, I come from Lehman Brothers. I worked in Lehman Brothers in 2008, and they filed for bankruptcy. I lost my job. So I know all the craziness that happened in the financial world and can happen in the future. At one point of time during COVID days, the crude oil prices went negative. Now, no one would have believed crude oil negative price means that please take away crude oil and I will also give you money to take it away. And look at the prices now. So these are financial markets, and technical analysis refers to understanding of these market prices, not the goods, but just the market prices is what we want to understand. It's a science which is recorded in graphical format and studies the history, and it talks about repetition of a pattern. Human beings are patterned creatures. Okay, let me put it very maybe I might come out very rude on this front, but we are no different than animals on many of the things, right? From herding behavior, we want to buy when everyone is buying, we want to sell when everyone wants to sell. That is nothing but herding behavior. Okay, that's herding. We do that. We are driven emotionally rather than rationally. Yeah, when we are trading, when we are looking at markets, we are driven emotionally, we are not driven rationally, and that results into formation of certain patterns. We look at let me draw here and show it across to you. Just give me a second. We look at the patterns in terms of uh, the fluctuation. So if you look at the heartbeat, you see the pattern of the heartbeat, and you know something is wrong by simply looking at an ECG. Similarly, if you look at, instead of a heartbeat, if you plot a pattern of market, you can understand the heartbeat of the market. And that is very, very important, and that heartbeat can be measured in multiple ways. We will look at one of the ways of measuring the heartbeat of the market. So if I have to explain that, let me just see if I can annotate on the screen. Just a second. uh, yes, I can do that here. If I have to explain it to you, if you are measuring the heartbeat, you might be seeing something like this, a fluctuation which goes up, comes down, goes up, comes down. I don't know, I'm very bad with that. That's how it is. The fluctuation keeps happening, even in the market. The market, the change in the market is that this is the price and the chart time, and the fluctuation, instead of going sideways, the fluctuation happens rather in a trend. It goes up, it comes down, it goes up, it comes down. That's the fluctuation that keeps happening. That's the trend. And we need to understand the trend in which the prices are moving. How to go about it? We will look at certain aspects of technical analysis in order to understand that pattern. Now, trend is what I'll explain you on a practical chart. How does technical analysis helps in making money? How are the trends identified? It is very, very important that you have to understand. And overall, uh, very crucial is that you also need to know when you are wrong. Majority of the investors or traders do not go hand in hand with being wrong. It hurts the ego. No, if I book my loss, then it proves I am wrong. And that's the challenge. It's very important. It's a very classic saying, trend is your friend. Okay. When until it is bent, which means when the trend changes, you change your stand also. But that is not easy, because you have been, say, bullish on the market for some time, and suddenly you have to talk bearish. People's, what will others think? Why markets can't be up? But remember one thing, bhav bhagwan che, which is price is god. We need to follow prices, and not that impose our will on what price should do. And that's very, very crucial. So the basic Dow theory explains that there are two ways to understand. There are multiple ways to look at trend, but the simplest way is to look at the market as a higher high and a higher low formation. Higher high and a higher low formation means that the high is above the prior high, the low is above the prior low. Very, very simply, this indicates that the trend is on the upside, which means my mood should be, for as a buyer, I should look for dips and I should buy the market. The trend will change down when I see lower high and a lower low formation, which means this high is below the prior high, this low is below the prior low. I know that the trend is reversed on the downside. That's the trend which we can see has reversed on the downside. Now, it's as simple as that. It can be on the daily time frame chart, it can be weekly, and I'm assuming everyone is aware about what is a chart, else I'll just explain it in next 2 minutes also. That's a downtrend which we are looking at. There are three different trends in the market. One is the primary trend, the other is secondary trend. Then do we have minor trends, which means there are three different types of trend that we have to understand. Now, when we're looking at the primary trend, so for example, if you're looking at this chart, the overall movement on this chart, when we are seeing the overall trend is this one, which is primary. And then there are secondary. So when I'm looking at this, the primary trend is positive. The secondary trends are this one, which is secondary trends. And then there are minor fluctuations. So the minor fluctuations are, these are minor fluctuations which keeps happening in the market. Now, the problem with someone who is a doctor and trying to invest into market is that if a doctor is used to looking as fixed deposit as a return parameter, how does the line of fixed deposit work is, I'll show you. So if this is a fixed deposit, say this is date, it is month. You can say this is November, this is December, this is Jan, Fab, and so forth, the entire year. And a fixed deposit at 8% will look like this. This is how the line looks like. You getting an 8% return here. and you know you will get 8% return. Now, when someone who is looking at the market over fixed deposit, the average line might look like this, which can be 12% CAGR, which is compounded annual, and 8% is what I am optimistically saying, which is lesser than that. So 12% or 13% is what you can expect on an average basis. But the problem is the line does not move straight. The problem is the line moves like a heartbeat on a marathon race. It goes up, it comes all the way down, it goes up, it comes all the way down, it goes up. That's how the market fluctuates. So when it goes up, you are making 50%. When it comes down, you're losing 30% out of that 50. It goes up again, you will make say 70%. Then it comes down, and finally, on an average in the year, you ended up making 13, 14% overall index basis. I'm talking stocks can make you a lot more, or you can lose a lot more also. So the problem is that market moves like a heartbeat. Fixed deposit doesn't move. It's like a dead person. It is straight line. So if you want better returns, stocks, equity markets, commodity market, it is. If you want to live peacefully, then fixed deposit it is. Now you have to make a choice. If it is peaceful that you want to be, or if you want to have the thrill of life, you have to have all the fun, you have to see all the ups and downs and make more money. That's stock market. Now that's the fluctuation, that's the trend. So we have primary trend, we have secondary trend, and we have minor trends, which are minor fluctuations. Looking at these minor fluctuations is what results into a lot of anxiety, because these minor fluctuations, if you recently tracked Nifty went all the way to 26,000. It then corrected back to 24,000, 23,000. It moved back to 24,500, 300. Now it's corrected again down. That is the fluctuation which keeps happening. At the end, you will beat any other asset. So it is known as a history of 3 decades, 4 decades, 5 decades. Equity market has delivered much more return than a fixed deposit can give. As simple as that. And it is making sense, right? Because if you take risk, you get a reward. More the risk, more the reward. Now, how to understand this and what to do with portfolios? If you have already invested into stocks, you have invested into mutual funds, you have invested into a number of things. The challenge with mutual fund is also what? There are thousands of schemes. Now, which one have you invested becomes a question, and which one will perform becomes another task. And about that, you might not find time to track it. So I'm going to give you very simple chart, very easy chart. This looks very complicated. It is not complicated, but this is a very simple presentation. It's just a representation. I say trading or investing is all about representation. It is all about how you are looking at markets, how you are plotting it across on the time scale. It is a representation is what you have to check on the chart. So what is this representation? I have taken the data from the COVID lows 2020 onwards. Okay. And this is Nifty. This is representing Nifty. And in case you have any doubts or queries or questions, you can always, I'm not sure if they are allowed to post it on the chat or on the Q&A. If not, if is it possible for us to enable them so they can
So
also,
they can put on Q&A.
okay, they can put on Q&A. Fantastic. And if the okay, great. So if you have questions, you can just please put on the Q&A. And if you're looking at this chart, these are different index. So for example, Nifty is the main index which measures all the majority of the stocks comprised within Nifty. However, Nifty is comprised of different sectors. It can be healthcare sector, it can be pharma, it can be IT, it can be auto, metal, banking, all comprised together. Now, if I look from the lows of COVID, which sector did how did they perform? I can see that the pink line, which represents 445% return, is by CNX reality, which means real estate stocks have outperformed every single thing that you can ever imagine. And you can see that across, I'm in Mumbai, and the amount of constructions that we are seeing now across Mumbai, across places is crazy, at crazy level, which you have never witnessed ever in your life. And this reality index has given 445% from 2020. It's been 4 years. 445 is staggering, right? If you imagine a fixed deposit giving you 7% return per year, over the period of 4 years, you end up making 28%. Over here, you end up making 445%. But you have to be invested into that sector at that point of time. And the other sector shows that has outperformed has been metal index, which represents stocks from the metal companies. The other sector which you see here is the mid cap index. That's the mid cap stocks. Plus it represents the other 308% is auto, which means they have outperformed. What has underperformed really in these 4 years of time? Very interesting concept I'm going to tell you now. The things that have underperformed is FMCG. FMCG involves consumers, ITC, Nestle. You can look at something like an HUL. These are the stocks that comprise FMCG, fast moving consumer goods, which is consumption for day-to-day things. Something that has underperformed is pharma. It's only underperformed does not mean negative return. Underperform means basis of Nifty. This is Nifty. This is Nifty. Okay, basis of Nifty, these are the sectors that are underperforming Nifty. These are the sectors that are outperforming Nifty. The sectors that are underperforming is banking, which is 150%. The next one is pharma, and the next one is FMCG. Now, I have not put in IT. I can put in IT also. I'll show it to you on the real chart. So what I can see that if I have to invest now, can I bet on pharma FMCG kind of a sector? Is that the right thing to do? Because if these sectors start correcting, which we can see now, if you can see real estate is correcting, we can see the other sector, which is metal is correcting, we can see the auto is correcting. Okay. If that is the case, can I say that if that's the case, then the money is flowing out of these sectors and maybe coming back into the defensive sector? Defensive means pharma industry or pharma को क्या करना है interest rate से? People who are going to be hospitalized are going to be hospitalized. Interest rate does not matter. Okay, FMCG. If you buy your oil, ghee, tail, everything, you want to buy it, irrespective of what the interest rate is doing, what is the market doing, you will still buy it. So the consumption of FMCG, pharma, and those things pick up during the times when the other sector starts underperforming, which means this is a defensive sector. Defensive means, yeah, there is no other place to park money. Let me park money into defensive place. So now is the time when we can look at defensive sectors like pharma, healthcare, and you being doctors are much better place to analyze it than me, and FMCG. So that's the sector chart, which in a single representation tells you what's happening around. Now, I have worked with hedge funds. They used charts not only for sectors, they use charts to compare India, China, compare with US, compare with Japan, compare with Singapore, and see which markets are outperforming. They pick up that market. Then in that market, they try to compare which sectors are outperforming. Within the sectors, you can compare with, if you look at Glenmark, shall I park money with Glenmark or Cipla or Aurobindo Pharma or those kind of pharma stocks? You can Apollo Hospital. You can then compare each of these stocks within the sector and see which is outperforming, which is underperforming. If you are a value investor, you pick up underperformers. If you are momentum traders, you pick up outperform. Now that's your own style of looking at which sectors you are picking up. So like we have different fields, right? Someone uh, prefers dentistry, someone prefers to be a surgeon, someone prefers to be an oncologist. These are different things. Similarly, here, value investor will try to look at underperforming sectors, find value out of it, and momentum traders will pick up the outperforming. Now, how to plot it? This is on a PPT. I'll share that PPT also later with you. If I want to plot it, I am going to open up my trading view and just going to show how I'm plotting this thing across so that it becomes comfortable and easier for everyone to do yourself from tomorrow. You don't really need me. My aim and vision is just one. I want to empower traders, and it's very important that empowering means that you make them independent of yourself. That is empowerment. So let me just log in my trading view. Just give me a second. I'm logging my trading view and I'm going to show you the crux of how to simply go tomorrow and look at markets and how you can try and do things. So let me just share that across. Give me a second and I'm going to share my screen. Meanwhile, if you have questions, you can always please post it in the Q&A. I'll just check that. Okay. Presently, the market is little low. Is it good to invest in mutual funds now as a lump sum? First of all, there are multiple questions within one question. Market is little low. What defines low? And how do you know it's done or it's reversing? 10% is low, 15 is low, 20 is low, 30 is low, 5 is low, or 50% is low. How do you define being low? That's one question that you have to ask. Invest into mutual fund as a lump sum. Which fund? Sector fund, debt fund, equity oriented fund, large cap fund, multi cap fund, mid cap fund, small cap fund. Within that, which fund house? So, the challenge is currently every investor has is there is so many things to choose from. You're all confused what to do next, and you don't have anyone to give you the right answer. And you expect it to me from me right now in just 1 hour of time is going to be a challenge. I'm not going to disappoint you, but I'm going to be honest with you. For investing, you need to know which stocks you are buying, why you are buying. There a reasoning? Most of the investors, I'll be very honest upfront. I'm the guy who is upfront on face if it is that way. Is most of the investors are the ones who read the newspaper, make up their mind about a stock or a fund and just invest there. Most of them do that and then they lose money because if you are someone who is reading a newspaper and investing, you are possibly the last, very last one so to invest. So don't do that. Okay. uh यहाँ पर let me go on the chart and explain it to you in a very simple fashion. I'm This is a complicated chart which for you all is for me it's the heartbeat of the market that I am seeing. For you all it can be Latin and Greek. So something happens with me if I look at a sonography or an X-ray. I have no clue what it shows. And if I show to a doctor, they within 5 seconds know what's wrong there. I said, how do they get that eye of looking at an X-ray and telling what's wrong where in just 5 seconds? So that this chart is something like that. I'm going to open up a blank chart to be honest, and then I'm going to show you what something very simplistic way of for you to understand it. So if I'm going on a weekly time frame chart, I'm looking at this simplistic weekly time frame chart. I'm assuming if you know what is a candle. If you don't know what is a candle, I'll just explain it to you in a second. Let me see if I can do an annotation here. I don't think annotation is enabled on. I know I can't draw things here. Chalega. Let me just go on the PPT and show it to you uh, how it looks like. Okay, are you able to see this chart now on the PPT I'm showing because I'm not able to annotate it or draw it on the trading view right now?
Yeah, we
Uh,
can see two
the-
candles.
yeah. So this is the open and this is the close. Price is opened here, closed here during the day. And this is the high and low made during the day. That's a candle. Now, I'm not getting into the candlestick explanation, but I'm saying that this is a simple way of representing a data for the day, what happened during the day. Now, if I go on this chart, the first thing that I have asked when we started is simple way, what is the trend? We need to know that. Okay. And we can see this much of chart on a weekly time frame basis. You can see this is the low which was formed in COVID. It's a price chart where you have a price scale on the right, you have a time scale at the bottom, and this is the low formed during the COVID period. I can come here, connect this line and connect this line together. Okay. When I connect these two lines together, I plot a trend line. This becomes my support line or a demand line. It's also known as a support line. It is also known as a demand line. I can simply right click and clone it. When I clone this across, I can plot it from the top here. Okay. I'm plotting it from the top here. Now, this shows that this is the overall trend of the market. I can connect from the top and I can connect from little top which was formed at this point of time. This becomes my chart and it becomes a very important information for me to take. When I look at this chart, I can say that 22,600, if you check around the right side, 23,000, 22,900 is where the support for prices is, which means something like a heartbeat. You might say heartbeat will not go below 60 on an average basis. It will not go beyond 150 on an average basis, or maybe like a blood pressure. It represents the pressure of the market. So it means that if tomorrow, in few weeks, few months, few days, if Nifty manages to come around this area of 23,000, 22,900, 23,000, 23,200, around this zone, if it comes, now is the time when I can start investing, because prices have a tendency to go to the extreme of the upside. It has a tendency to come back down. It again goes to the extreme, again comes back down. This is the extreme readings that we are seeing on the market. And basis of this extreme reading, now we can decide that now it can be the right time to invest. Maybe in mutual fund, maybe in stocks, maybe in index, or wherever you are thinking. So for me, how did I derive this? I simply connected the lower trend lines. I looked at the primary trend. I'm looking at the secondary fluctuations, and I'm looking at these fluctuations and deciding where to invest, which level to look out for. Similar concept, you can apply it not only on Nifty, you can apply it on any of the stocks. So for example, if I look at Cipla for that matter as a stock for investment, and if I'm looking at the weekly, I'm looking at a bigger term chart right now. And if I'm looking at the weekly chart, and you can look at since COVID low. Why COVID low? Because that's the time when majority of the stocks has fallen and rising from there. So if I look at from that perspective and I go on a logarithmic scale, so there are two types of scaling, regular scale and log scale. Right now, we might look at simply a regular scale on the chart here. Now, if you're looking at this regular scale chart that you are seeing over here, if you can connect the dots, simply the lows, nothing to do. This point and this point, I'm connecting here, taking a parallel, connecting from the top here. Okay, I get a trend line, support trend line, and taking a parallel again and connecting from the top here. Okay, now I can say that very easily that prices are fluctuating between these levels. Okay. And overall, uh, overall, if you look at this, uh, the support is at this zone. So when I'm drawing a line, I might draw a support line. That's the support line. So I might want to invest little into Cipla at this point of time. Okay, there are two reasons why. First reason, the chart which I showed it across to you, which I am just going to show it again to you, is this one, where I am looking at an underperformance from an pharma and an FMCG compared to what happened from COVID onwards. This one. So I'm expecting these sectors to outperform. Next, when I'm looking at Cipla within this sector, I can see it is at this zone. Can it move down to the lower zone? Yes. So I am telling you, it is time to buy little now. It is time to buy more if it comes down to 1300 or 1290 odd levels. And then you can ride this trend on the upside. Very simple way of looking at it. So that's one sector that you looked at just now. Now, if I look at, say, something like the sector stock like a TCS or say Infosys for that matter, it can be anything. I can see that Infosys, this is again a weekly chart of Infosys. I can see that Infosys since 2020 went up sharply, came down, and it is now standing at this point of time. Now, this becomes my hurdle as in resistance. Okay. If I connect the lows together on Infosys, and let me do that, I can just simply connect this point, and draw a line. This becomes my Infosys ka trend line on the downside. And if I take a parallel of it from the top, I can see this. I plotted a channel. This becomes my channel on Infosys. Now, if I see this chart, it makes so much sense. I've just done three lines, connecting the lows, taking a parallel of it, connecting from the top, and connecting these tops together. Now, if I have to invest into Infosys, I think 2000 is the level where the hurdle is broken and now it can go up. That's what we can say. It's similar to COVID cases, right? What happened in 2020? When you look at the number of cases increasing slowly, now you know it's going to increase exponentially. Similar thing to with chart. Now we know that it's breaking out of the resistance. Now we know it can increase exponentially towards the upper trend line. That's how you can invest a stock like this one. And breakout above. This is known as a breakout. It's known as a rounding pattern. I'm not getting into patterns because it will require a lot more time. But it looks like a rounding pattern breaking out. If it breaks out, we'll have a classic opportunity to enter to see these prices over here. Are you with me? And that's how you have to look at it. Okay, there is a question here. In Cipla, would you wait for price to hit the lower trend line before investing? When will it fulfill statement that buy on dips? No. So I will not wait for it to go to the lower trend line and invest. For example, as I said, I will invest little now. If it goes down further, I will invest until this zone. If I get it here, brilliant. But even if I don't get it here, I'll keep investing on the decline until this zone. Exactly, this stock becomes buy on dips. Now, which stocks should we avoid buying? We looked at Infosys, we looked at Cipla, we looked at the stocks that are doing exceptionally well because these are making higher high, higher lows. The primary trend remains bullish, and it has been on the upside. Now, which stocks do we avoid? Something like let us look at an example of a few stocks, which is something like Samman Capital. Now, if I look at this stock, what do I see? It went all the way from 1200 rupees. Okay, this was India Bulls Housing Finance earlier, now this one. It all went all the way from these levels to the downside level of 167. I don't want to buy here. Something like this, which is a disaster, where in since 2020, the entire world went from where to where, and look at the stock is doing disastrous. I will avoid buying a stock like this. I'll avoid buying a stock like this. This is on a weekly time frame. You can apply the same concept that I'm talking about on the daily time frame. You can apply these concepts on intraday. You can apply these concepts on positionally. You can look at any of these time frame. Let me show you one very interesting chart. Let me open up my another chart here. This is forecasting my targets and everything basis of some wave theory, some complicated methods, but I'm keeping it simple right now. If I'm looking at this chart, this is Tata Motors chart on the daily time frame where I'm looking at it. Like we looked at the trend line support, okay? We can also look at time support. So far, you might have heard about people talking never time the market. Everyone talks about never time your investment, do an SIP, always do an SIP. I'm saying that it is possible for you to time the market. No one told you that because no one knows about this study. If you do not know about a study, you think it does not exist. Okay, but it is existing. Something like this, which is so amazing method, exists. What is this cycle? Kal Chakra. Time cycle, I call it as a Kal Chakra. Everything repeats. So if you think in a way, there is 12 and a half year of a solar cycle, which repeats. There is 28 days of lunar cycle, which repeats. There is actually a period, if you, even in medical history, if you look at it, you might find out a phase in 4 years of time that majority of the cases that come of people being depressed, people feeling low, happens seasonally, especially specific year, specific month. In fact, if you look at winters, that's the month when people usually are more depressed. If you go not in India, if you go towards US, if you go towards Canada, if you go towards the northern hemisphere, you will see that the period which starts from October and onwards until January is the period where you have maximum cases of people committing suicides, committing depression, mentally unstable, because that's the period when the sunlight is minimal in that phase of the earth. When the sunlight is minimal, the energy is not there, the energy is not produced, and we are light driven creatures as well. It's not just the insects, even human beings are driven because of light energy is not there, and that results into the entire association of us with feeling low. Now, something which is so seasonal can be very easily reflected in markets also, but not in a very upfront way. It is reflected in markets in a very subtle way, and we can measure that seasonality through the concept known as time cycle, which means that every stock has a characteristic of reversing on a specific time period. If I tell you that, I can say in case of Tata Motors, the stock went up from here, from these vertical lines. It went up from this vertical line. It went up from this vertical line. It went up from here. It went up. Is it going to be always? No. It can be from different parts. Now Tata Motors is again, will it be always? No. This time it didn't go up. It just went a little up and failed. But we are again approaching this period, which means by 4th of December, by 5th of December, I think it's time to buy Tata Motors again. I'll not wait for 4th or 5th. I think we should start accumulating Tata Motors again. Why? Because the time is near to buy this stock. That's the concept. This is the concept known as time cycle. I might not be able to delve into a much detailed approach about it because it requires a lot of time for me to explain. And but I just want to tell you, this exists. Okay, if if something like this exists, you should know यार इसके ऊपर कुछ कर सकते हैं, मतलब something like this exists. So what is the period of this time cycle? I think you know time cycle. If you're following me on Twitter or YouTube, you might know a lot of things. The period of this time cycle is you can subtract 831 from 777. It's going to be 31 plus 23 is going to be 54 cycle. So it's a 54 cycle. Okay, that's what Tata Motors follow as a 54 period of cycle. So there are two things which I explained you. One is the concept of channel, and then the concept of trend lines, which is price driven. Those are price driven technique. This is time cycle, which is time driven technique. I want to also show you how do I compare, how did I plot the comparative chart, which I showed you on the slide over here, so that you can do it from tomorrow. I want you to take back something, you can do it yourself from tomorrow. That's empowerment. So if I go back, say I start with Nifty, look at all the complexities, simple chart, simple. Okay. Uh, Over here, if I'm looking at it, I can simply add from here. I can add anything. If I want to compare whether I should park money with Hong Kong, I can simply do that here. I can compare with any sector, any stock. I can compare with anything else. So I can compare with, say, uh, I want to compare with all the pharma stocks. So I can put Cipla here. I can put Glenmark here. Okay. So you can do that. I can start putting in across something like Apollo Hospital. Maybe I want to check if that's doing better. I can put with something like Pfizer, but Pfizer has to be Indian Pfizer, not with the Pfizer of the US or the UK. I can put that, and I can simply come here on the chart. I can put something like Marksans Pharma. There are so many sectors that you can simply put and check what has happened compared to Nifty. From the COVID period, you can check from that period. And this is crazy. So I want to see यार कौन सा वाला stock है which has been crazy. It's Marksans Pharma. It is crazily higher, which means what a performance this stock has done compared to every single one of like Cipla, Glenmark, Apollo. It has simply outperformed everything else. Now, just as a disclosure, I have investment in Marksans right from the lows. So over here, if you're looking at this, you can compare, okay, which is the stock, how is it performing, which is the lowest performing stock. You can see the lowest one is Pfizer. Cipla has just been a disaster. It didn't do anything much. And you can look at all of these things and compare with different stocks and take a call. Which stock is rising from the underperformance? Is it rising back above Nifty, which means it is outperforming? And Dr. Reddy, of course, you can include a lot of stocks and then do this comparison. Once you do the comparison, you have some understanding on which stock has corrected. So, for example, if I'm looking at this stock, if I'm looking at this chart, I might want to look at here something like Cipla. It didn't perform for so long. Let me go back on the Cipla chart and check, can it outperform? Can it be the stock that I want to check and outperform it? So I'll just simply go back to Cipla and see if there is any kind of a pattern that the stock is forming. And I can look at a weekly chart of Cipla. And then, like we discussed, okay, on the weekly time frame chart, that's the trend. You can look at Dr. Reddy, you can look at Divi's Lab. There are many. I'm just giving an example how to go about it. You can look at Cipla, we already looked at it. Maybe we look at something like a Divi's Lab. Look at the outperformance of this index. This stock is crazy. Where Cipla performed actually. On the upside, if I connect this and I can take a logarithmic scale, And this will make a lot more sense on a long scale. That's Divi's lab on a long term chart. And look at the way this stock has come from. If you had invested in 2004, 2005, this stock was quoting at 66 rupees. It is now quoting at 6,000 rupees. Now you can do your mathematics. That's where you come across the saying that markets can make you wealthy if you sit tight, but on the right stocks. Everyone talks about it, but forget the most important thing. If you are sitting on the right set of stocks, there are 5,000 stocks, and you have to be sitting on the right ones at the right time so that you can ride such kind of a bull trend in those stocks. If you have been sitting on stocks like Suzlon, which has been disaster going from, not recently I'm talking about, the stock has gone from 300 levels to 3 rupees, from 3 rupees to 90 rupees, from 90 rupees back to 60 rupees. So if you're sitting on that kind of stock, you need a strong heart. Okay. Otherwise, if you want to something like a much more systematic way of movement, you can pick up other kind of stock. So you can decide whether you are here for entertainment or you're here for making some serious money. If you are here for entertainment, I can give you 100 stocks for entertainment. If you are here for making some serious money, I can give you 10 stocks that can help you to make serious money. That's what market is. It makes the best of you, it makes the worst of you. And at the end, you will kick yourself if you miss it out. And at the end, you will be as high as taking a dope if you make a killing. That's how the market keeps you engaged, and that's why I love it, because it shows the worst of you in front of you, it shows the best of you in front of you, and it shows how you handle that situation at that point of time, and how did you come out as a better individual, knowing that you did something stupid. So most of the times the trader's life at home is something, if you lost a lot of money at home, you behave very differently. But if you made a lot of money, you book a flight to Switzerland. So that's how the trader's mindset, and that's how it keeps fluctuating. But as it is said in yogic culture, that it should not matter whether you made a lot of money, you lost money, it should not matter. You should be the way you are supposed to be. So that is detachment. If you are detached, you are not moved by it, you are not carried away by it, you can make a lot of money. But if you are attached to a stock, now that's a disaster. If you want to marry once, which everyone does. Don't marry stocks, is what I would suggest, because at one end I'm saying you have to be with the stocks as long as it has that flavor, and then be ready to be away from it. Okay, it's very crucial. you know Being married means that you have to come to it again and again and again. From that perspective, I'm talking flirt with the stock. You just go, you enjoy, and you leave it. Let it be in your portfolio and look at it after a year and see if it is on the right track or not. Don't bother much. Okay, which stock or sector ready for breakout? If you want to do that, then you need to look at something known as patterns. Patterns are very crucial. It can be time pattern, it can be cup and handle pattern, it can be Elliott wave patterns. You need to understand about patterns a little more in depth if you want to know about which stocks can perform, which stocks can underperform, all of those things. So, uh, I'm not sure uh, if we have the time or about patterns, but let me show you a few interesting insights of gold, silver, because I think everyone wants to know about gold, silver, Bitcoin, those things also. If you look at gold every 51 days, gold has a tendency to go up. Yes, that's true. Every 51 days, gold tendency to go up is not because of marriage season. If it would have been that easy, I would buy gold every time before marriage season starts, after Shraddh, and I will sell gold whenever it is coming to an end, and I'll make a lot of money. No, it doesn't work that. It is not so easy. So gold has a tendency to go up every 51 days. Why? I don't know. That's love for of gold with time. Okay. So if you look at this chart, went up from here. It went up from here. Here it went up, but then collapsed. It went up from here. Right now we are again standing on that time, which means that it is the right time to buy gold because we are right now standing on that time, which means it is time to buy gold. That's how you have to look at it. This is time cycle. If you look at silver, this is silver chart. Silver, I think, is going to be early January or late December. Silver can be the stock or sorry, commodity that you want to buy. So if silver manages to come down a bit more, okay, I want to buy silver then because it comes towards the channel. If you look at this channel, this is the support, this is the support, this is the support. This is also the time support, which means it's time to buy silver. That's how you have to look at it. So I will look for silver by mid of December. Post that, for me, silver can be a classic opportunity to buy. Okay, that's how I'm going to look at it. There is a question here. When to decide which stock or sector to ready for breakout? You need to know patterns. I'm not doing that right now because of time constraint. If I have to restructure my stock portfolio today with 3-year window of investment, what are the best stocks to buy today? Oh, wow. That's a very, very interesting question. Which stocks to buy today for 3 years perspective? If I give you the stock and if tomorrow it goes down by 10%, you will say because of him I lost money. If it goes up tomorrow, you will say it because of me I made a lot of money because that stock. But since I'm not going to discuss very tell you which stocks to buy in your portfolio, restructure your portfolio. So first of all, I should know which stocks you have in your portfolio. Okay, I don't know that. Maybe you are having all the right stocks. Who knows? Maybe so. Restructuring question comes once you know the stocks that you have. Yes, why not 1 year? That's the question. If I am to pick up a stock and give it to you, I'll pick up from the space of IT, pharma are the two stock sectors that I'm bullish on. I'm bullish on stocks like Infosys. I'm bullish on gold. I'm bullish on Bitcoin. These are different asset, but it diversifies my risk. I'm bullish on, and I'm just told you I'm invested into Marks, but it has already gone up sharply on the upside. I'm bullish on Tata Motors. The reason I mentioned you. So the stocks that we are discussed now are the stocks that I'm expecting a positive move because I've given you the reasoning. Now I might be invested into a few, I might not be invested into them. So are you with me, everyone? So I want to make it very, very clear that it is very simple. What I would suggest is if you can at least draw a trend line, pick up a stock. I have those stock selection algos which we do in our mentorship program. I call my mentorship program as Brahmastra. It's that is what we do. But right now I cannot give you a list of. So if I have to invest into stocks, I will have at least 10 to 15 stocks where I will be invested into in a staggered fashion, not in one go. So for tonight, 10 stock का नाम लिया, कल जाके 10 stock में invest किया, and then you see your Nifty corrected by 1,000 points, my all portfolio is down by 20%. No, it doesn't work that way. It has to be done in a systematic fashion, not SIP way. Systematic way, looking at the chart, looking at the structure, looking at the time, and then combining the best of it, and then uh, investing into those kind of stocks. So a few stocks I've already told you: Tata Motors, Cipla, Infosys, Marksons if you get a dip, those kind of stocks. Do look at something like an FMCG if you want to, but ITC might take time. So maybe a little later, FMCG can be doing well. These are the stocks you might keep a watch on. Bitcoin, I'm extremely bullish. Gold, I'm bullish. So you can do those things, and you can do that. So that's how I think you should be looking at things. You should be approaching it. Nifty chart we have discussed about these weekly, daily chart. This is a chart which I anticipated before the fall happened in September, using the concepts of time and wave theory, that price should come down here towards this level and can bounce back. And look at the wonderful way in which it moved. Precisely, it moved down there and reverse from there. This is a past chart, not the latest one, by the way. So it moved from this way. That's how it moved. In fact, there is something known as the lunar cycle. Uh, since we had talked about time, I'm not sure you might appreciate a financial person talking about a lunar cycle. I'm not an astrologer. I have no clue. I don't understand planets. How to remember those 9 planets have been a task for me in school. And over here, I'm talking about the lunar cycle, but it works. So the phases that you see here is the moon phases, which is Amavasya, this is Purnima, stock market behavior is very, very typical. And this is science. I'm not saying this is not science. And being in the field of medical, you will appreciate this thing more than me, because if you look at the entire planetary movement, the entire planet results into a high tide and low tide because of the moon cycles. The entire fluctuation, human body is made up of more than 70% of water, is fluctuate because of the uh, lunar cycle, which we are not aware of. Female body follows a 28 period of cycle. 28 period is moon cycle. It is only because of the moon cycle that female body follows the 28 period cycle. Because they follow the 28 period of cycle, we exist on this planet. Though something which is the reason of our existence on this planet, will it not impact stock market is what I'm asking. And don't take it for my word. What I'm saying is, do it yourself and check how it is impacting. Uh, so I'll discuss that more in detail, not today. The time just flies. It's an hour. Did you even realize that we are an hour into the webinar and I didn't even start? I'm just on the scratch of it. It's a vast field, and it's a beautiful financial subject which I'm extremely passionate about, and I love teaching, but time time just flies. So this is Sensex prediction, which I talked about in most of my webinars, where Sensex was in 2013 July, trading at 18,000 levels, and it was forecasted to touch 61,000 by 2021. Sensex touched 61,000 in 2021 October, post-COVID. Bank Nifty was at 18,000. I forecasted Bank Nifty to touch 40,000 by 2021. It touched 40,000 by 2021. Exactly. This is from July 2013 research. And all the explanations are here. So what I'm trying to tell you is that it works. You need to have the right set of tools, especially in this information era where you have every other person making a YouTube video just to tell you क्या करना चाहिए. Every other person has started doing that. You need to ask their credibility. That's the first thing. The credibility no one asks. What they see is that how beautifully it is being decorated. The credibility comes from whether has he authored a book. So for me, let me establish my credibility, to be honest. I have written a book published in London in 2020, launched worldwide. I am a chartered market technician, cleared all 3 levels in 1 year. I lost my job in 2008. That's a credible thing to do, and I'm still surviving, which means I did something right. I've won Kiladi #1 shows more than 31 times, approximately, I'm saying. And it was asked to me on the show also that every appearance is a winning appearance. What is the secret recipe? I'm sharing it with you. I've mentored thousands of people, and I keep writing research. I have passion for writing. I have written for Economic Times section of Navara Times. I have written for Journal of Technical Analysis, in London. I've written for Society of Technical Analysts in Singapore. I've spoken at IIM Trichy. I speak at IIM Chennai, which is an extension of Trichy. I speak at NIBM. I speak at NISM. And that is establishing credibility, right? Because when I lost my job, I asked my mentor, yeah, how do I enter into this field? He said, you need to form your credibly experience and you need to showcase to the world you are different than everyone else. And that's what I did. And that's what I did in 2009. And I started building up on these concepts, which no one knew, and established myself in the field where it's very challenging to enter, being not from a financial background. But I want to tell you one thing very clear. If I am able to do this, there is in no way you cannot do it. Being in the medical field, being in the medical fraternity, you have all the levels of IQ that you should have. It's just the EQ, which is emotional quotient you require to plug in, and it will happen for you. So that's how it is. Just before I wind down, I know I don't want to take up your time for dinner. I have an app which is known as Ashish Kyal Trading Guru app. You can possibly download the app. There are some free videos under the free materials section on the app. This is left side QR code is for the Play Store. The right hand side is for the iOS. You might have to enter the organization code as ESIAD in case you are downloading it from an iOS. And you will find a lot of things which are free, and there are things which are paid as well. But the free things, you will find it under the free material. You will keep getting alerts about markets, research. There are research reports there. There is an ebook on technical analysis by me over there. There is a free ebook is what I'm talking. So you can get it from there. So that's the app Ashish Kyal Trading Gurukul. And there is a multi-bagger research which I'm offering an additional 10% discount. So it's a research which is discounted price at 30% with an additional 10% for all the participants who are here with a code as special 10. And you can possibly opt for that if you want to know which stocks to select. There will be a stock selection course in there in a much detailed fashion, or if you want to know the stock itself. So it will be research report where I'll give you stocks every single month, which stock looks good. If you want to restructure, you can do that, all of those things. So and that's the QR code. It's in my app itself. The code, the coupon you can use is special 10. That's the coupon. If you use, you can do that. That's the mentorship program which I keep conducting, and that's about it. And what you get, I'm not getting into all the definitions. Quick disclaimer, guys, we are SEBI registered research analyst, and whatever I'm doing here is purely learning perspective. Whatever I recommended, I might have investment into that, and you have to do your own homework. The contact number can be 9920422202. You can just save that across.
Excellent. Ashish ji, that was absolutely fantastic. Not only were you able to, explain in a very simplistic manner so all of us can grasp finer points, but at the end, you also showed us all the ways in which we can connect with you and get the benefit of your insight and all the research that your team is doing in terms of portfolio reallocation and adjustment. So once more, on behalf of all of us, I must, really appreciate the time and effort that you have taken to join us and, be such a valuable speaker for us. We hope that you will also agree to join us in the future and continue to allow our group to learn and benefit from your expertise. With
Sure,
that, I
sure.
thank you very much. There are several questions that will keep coming, and we might bother you by email or by WhatsApp for
The
answers on
best
that.
way to ask questions also is Twitter. I'm very active on Twitter.
Okay,
You can tweet,
excellent.
or also on the app, there is a chat feature there. If you download the app, you can also chat with me. So that can help us to connect much better. But I'm 1 hour is something where I was just contemplating for most part of the day whether I should talk about this, whether I should talk about that. I was not sure how to go about it. So I picked up everything as an impromptu way of simply explaining the chart, and maybe it is too basic, I don't know, or maybe it is too advanced. I just tried my best.
No, no, it was extremely useful. We must thank you very much.
Okay.
Okay.
Thank you.
Take care, everybody.
Thank you.
Good night
Good night.
and have a wonderful dinner.
Thank you.
Thank you very much.